Economic moat is the competitive advantage that one company has over other companies in the same industry.
My name is Kaseem. Welcome to the channel. So in today's video, we are going to do an update on this dividend and growth investing portfolio. And I've been doing this update since this portfolio was roughly about $500. And I'm going to keep on doing it until it gets to about $1 million or more. You know, welcome to the $1 million challenge. The whole point of me doing that is to get this portfolio up. So that way I can be earning dividend and that money will be accumulating here. And hopefully on a monthly basis, this can cover my bills over time. If I click on the month view here and I click on this, hopefully when this portfolio crosses $1 million, this would be $2,000-3,000 on a monthly basis. That's the main goal of the channel, to get this portfolio above $1 million, and hopefully it will be generating dividend that can, you know, maintain my lifestyle and I can use it to pay my bills, invest out of it and all these things. So that's the main goal. I'm a young guy and I'm going to keep on investing in this. Hopefully by the time I'm grown and old, I can, you know, rely on this money to be able to sustain me over time. So that's the whole point, $1 million challenge. So what we're going to do today, there's a lot of things that we're going to talk about. We are going to talk about economic moat for businesses. We're going to do an update on what have been going on, the activities that have been going on. So there's a lot of things that is going to happen in this video. So stay tuned. So before we get into that, I always like to let you guys know that, you know, of course, this is not investment advice, not telling you to do the same thing that I'm doing. I know what I'm doing. Please be careful. You got to do a lot of research before you start investing into a company. So this is not investment advice. So what I usually like to do every time I do this video is to share with you the progress of the portfolio when it comes to the amount of money that I'm making, because the whole point of this portfolio is for me to invest in dividend stock and in growth stocks. Okay, so let's talk about the dividend side. So for the dividend today, we didn't receive any money. For the past week, the portfolio generated $10, and for the past month, the portfolio generated $96 for the past month. $96 in a month. Okay, that's how much the portfolio generated, and the money came from all this side of the portfolio, and you can see the breakdown of every single amount here. So for the month, we're doing good, almost $100 for the month. That's not bad. So if you take a look at the past 3 months, we've made $154, so roughly about $50 a month for the past 3 months. That is nice. That is nice. And obviously, the more I grow this, the more that would be as well. So in the past year, it has generated $618. You know, in the past year that we've had this portfolio, $618. Pretty nice, you know. And for all time, we've generated $810. So that is pretty nice. You know, the portfolio keeps doing what it needs to do, and it keeps growing fast. You know, if you take a look here at a year, past 1 year, we're up, you know, 27%. Granted, it would have been more, but ARK Invest is a little bit down probably compared to the S&P 500. But, you know, I keep on growing this, and I think over time we're going to do even way better than the S&P 500. So.
And Charlie became a man that Warren depended on heavily. And I think his first experiences in the discarded cigar butt era convinced him that it was not exactly where he wanted to be.
He'd made so much money for so long doing what he'd been taught by Ben Graham, which is to buy these very cheap stocks. And if they were cheap enough, he didn't care if it was a lousy company and a lousy management. He knew he was going to make money anyway just because of the cheapness.
Charlie Munger has had a big impact on me in moving me toward looking for wonderful companies at fair prices rather than fair companies at wonderful prices. And that was enormously important because it enabled Berkshire to scale up in a way that would have been impossible to do otherwise.
Yep. What are the key indicators you look for within companies before making an investment?
Well, I look for something that does give them a moat around it.
The most important thing you can, you know, what we're trying to do is we're trying to find a business with a wide and long-lasting moat around it, protecting a terrific economic castle with an honest lord in charge of the castle.
Economic moat is the competitive advantage that one company has over other companies in the same industry.
So some of the other companies that I've been buying pretty pretty aggressively. Anytime the company drops, I keep buying them because they have huge economic moats. Some of the companies that I keep buying are right here. Keep buying Microsoft because Microsoft has a lot of assets and they keep reducing their debt and they keep reducing their dividend. They keep increasing their dividend and also reducing their share count. So I keep buying it because they have a huge ecosystem. They're integrated with so many, they're integrated with so many companies. So I keep buying Microsoft. Also, I keep buying TSMC, because we have the chip shortage, and like they're one of the only companies, probably not the only company, but one of three that do what they do, and they sell to everybody. So I keep buying them. The only downside to this is you have to pay foreign tax if you invest in this company because they're in Taiwan. So that reduces your earning power. But I keep buying them because they as well also have a huge economic moat. Their chips are like the best in the world. Every company keeps buying the chip. So that is why I keep buying Taiwan Semiconductors here. The third one that I keep buying is Vici. I don't personally have any real estate investments, so this is my way of getting into the real estate game a little bit. So I keep buying Vici, and I'll keep on buying Vici. And then what I did with this one, this is an ETF that basically focus on tech and software sector. So I just keep grabbing a little bit of them because on today the tech sector was basically weak. So I grabbed a little bit more of this ETF IGV. So as of the day that I'm recording this this video, you guys can see here the tech sector is pretty down. So I just thought, let me grab a little bit more of the tech sector. Even the semiconductor sector here, they are down. So that's why I bought some more Taiwan Semiconductors. These companies are quite amazing at what they do. They all are greatly entrenched into people's lives. People use their product every day. And some of these companies, other companies cannot do without their product. So as you know, the chip shortage lately, Taiwan Semiconductors, their factory is probably on 24/7. They have their earnings coming up soon. I'll try to listen to them for the first time. Vici, they're doing their thing, and I'm just so happy about this buy. So I thought, let me share that with you. So you guys see here, this is $500 that is being invested. The portfolio keeps on growing nicely. This month we've invested almost $9 grand. I've been buying like crazy because the market in the past month, the market has been going down a lot. If you take a look here, a month's performance, the market has basically been down. So I've been grabbing a lot more stocks in the past month. So that way, the portfolio can grow. So some of the other changes that happened during this time period is I basically decided to buy a lot more of Apple stock. As you guys can see, a couple of weeks ago, Apple stock was well over $157, and at the moment it's currently at 142. So it's dropped a lot, and I think Apple stock most likely in the future probably will trade to 200, 250. So I've decided to buy a little bit more. So I'm putting in like about over $2,000. I'm putting it right into just Apple stock. That shows my conviction in Apple because they are killing it at the moment. They just came out with a bunch of new products. Their phones, like I said in previous videos, they have new phones, new watch, new everything. Like I mentioned in previous videos, Apple are coming out with new products all the time, and all these products, they are basically like collector's item. This watch now is going to order status, so you can order now and get it in a month and a half, and people are going to order it. I mean, look at all their products all their brand new products that is out there. The computers are getting better. They're making new products. They're making everything just better. Apple you know, you let Apple do Apple and they do great things. Knowing that, and this stock pulling back this much, for me, it's a no-brainer to just jump in and buy a little bit more of the stock. And that is exactly what I did. I'm going to put in about $2,000 and put that into the portfolio. The market is down a little bit today, $200, relatively small for my portfolio size, but the market is down nonetheless, and I'll take advantage of it and, you know, grab a little bit more. So as I was doing some more research into the portfolio, because this portfolio, it's an ongoing project, one that I try to fine tune, tweak, to make sure my returns are basically as much as I possibly can get it. So some of the things that I've been doing when it comes to changing things around in the portfolio is, as I was doing some research, and I think I did a video on this in the past, I was doing some more research into the portfolio by just looking at, you know, all my holdings. I realized I still have MGM Resorts. And basically, MGM Resorts is being bought out by Vici. Basically, he's buying out MGM Resorts. So I just decided to sell MGM because they don't pay any dividend, and Vici does. So basically, this company are merging. They're merging anyway. So I decided to sell out of this and put that money right into Vici, plus all the additional money that I was looking to put in into Vici anyways. So MGM as it is has grown a lot. It grew 204%. That's crazy. I wish I had a lot more money into this, invested into this at that time. It would have been really nice gains. But it grew 204%. So I feel like at this point would be a good time to sell out of it, take this money and put that money into Vici, because it has really grown a lot. So, and they don't pay any dividend ever since I had it, you know. And when I started this portfolio, you don't pay any dividend. So I decided to sell out of this and take that money, put that money right into Vici. So yeah, I decided to sell out of this, put that money into Vici, and that's what we have here. The second part that we have today is right here. So Activision Blizzard here, you know, it hasn't really done much in owning the stock as an individual company. Basically, I've lost money all throughout me owning the stock. So I decided to sell out of it and take that money, put that money into my gaming ETF under the passive income section, which is right here. It's down 20%. It's down 20% year to date. So I took that money to put it right in here. At least it pays a little bit of dividend. Let's see, Webbush. So that company pays a little bit of dividend. I can be gaining a little bit of dividend from this. Granted, it's not going to be much, but gaming industry is going to be huge moving forward. You know, the gaming industry is advancing. There's VR now that you know, gaming is looking like it's going towards mobile gaming. So I'm better off putting the money into a group of ETF that is geared towards gaming than owning an individual company. So that is why I'm moving the money that I'm going to gain from Activision Blizzard, move that money and put it right into the gaming ETF here, to just simplify the portfolio, make sure to try to get the portfolio a little bit more leaner. And that is what I'm going to be doing across the side of the portfolio. I'm going to be moving them around, putting them where they're supposed to be. You know, that's what I'm going to be doing. So that way I can over time just get rid of this stock section here and just move everything into all the other part of the portfolio. So that is the next few things that I'm doing with this move. So last but not least, let me talk about Facebook. Facebook, what I just did was to move it around. I move it from the stock section, I move it into the tech section. And Facebook has been getting beaten down lately, so I'm keeping my eye on Facebook because of all the news that's been going on, the whistleblower news and everything. So I'm keeping an eye on Facebook, and I'm gonna be grabbing some once the news goes out of the way. lady that blew the whistle on Facebook, she is set to testify in Europe. Let me pull this up for you guys. So yeah, the Facebook whistleblower, she recently testified in Congress, and she's basically set to testify in Europe. You know, God knows how many other places, how many regions she would need to testify. So that would be weighing heavily on Facebook stock. But I think over time, once this story is out of the way, look at this, another person too that's, you know, testifying against Facebook. So once all this story gets out of the way, I think it would be a good time for me to get into Facebook seriously and trying to grab as much stock as I possibly can, just because I believe that regardless of whatever happened, this company, they take a huge market share of advertising online. They have a huge market share. Lots of small businesses use their platform. You know, them and Apple, they always at odds or whatnot, but they are a big player when it comes to the online ad industry. And, you know, over time, online ad industry is going to get bigger than just, you know, cable TV ads, if not already. And Facebook, Google, all these companies, they take a huge share of that market, which means all the news that Facebook is going through right now could really be temporary in nature. And over time, you know, all the companies like Google, Apple, Facebook, they are going to continue to get bigger just because, you know, they have a huge share when it comes to online ads. So any weakness on, you know, Google, on Facebook, on Google, on Apple, I'll be grabbing a little bit more. But right now, I would say I haven't really been investing into Facebook much, but, you know, this will present a nice opportunity to invest into the company, most likely. So I'm going to be buying a lot more Facebook once all the news dies down on Facebook. Once all this news dies down and we start getting, you know, just regular news from them, then I'll be buying a lot more. And look at the price that it dropped from. It used to be as high as $380, and right now is at $321. So it's dropped a lot, from 80 to basically 321. So I'll keep an eye on it. It could potentially drop some more, maybe to 253. So we'll see, and I'll update you guys accordingly. So this is going to be it for today. I hope you've enjoyed this portfolio update. Stay tuned. I'm going to be doing an individual video about this new section of the portfolio, the profit team section. I'll do an individual video on that later on. But I hope you've enjoyed this update. If you enjoyed this update, consider subscribing to the channel and giving a video a like. I appreciate you for that. Thank you very much. Until next time, see you later. Love you all. Bye.